Students, today I am going to work out problem number 11, which is there in your Xerox copy. So in problem number 11, we have three adjustments. The first adjustment is depreciation of rupees 20,000 on land and building and rupees 10,000 on plant and machinery, which means that we are supposed to prepare land and building account and plant and machinery account. So we have an interim dividend of rupees 20,000 which has been paid during 2014. So as you all know that interim dividend is not equal to proposed dividend. So this item of interim dividend which is given in the adjustment will appear both under the head operating expenses and also as a financing activity. So the third adjustment would be income tax. The income tax paid during the year is rupees 35,000. If you just look into the liability side of balance sheet, they have provided provision for taxation. So they are given opening and closing balances. So which means that we have to prepare provision for taxation account also. So on one more item that appear on the balance sheet is proposed dividend account. So but if you look into the adjustment, no adjustments is given for the dividend paid during the year. So we are supposed to prepare proposed dividend account also, assuming that the dividend paid during the previous year has been paid, and dividend proposed during the previous year has been paid during the current year. So in total, we are supposed to prepare land and building account, plant and machinery account, then provision for taxation account and proposed dividend account. So now I have prepared a land and building account. The only adjustment given was depreciation. So by depreciation 20,000, either you can write by depreciation or by adjusted profit and loss account. So when we balance the account, we have sale of land and building rupees 10,000. This amount of 10,000 will be shown under the head investing activity, and this amount will be returned without bracket. Why? Because cash is coming into the organization, which is nothing but there is cash inflow. The next account is plant and machinery account. So write the opening and closing balances of plant and machinery account, and the adjustment was 10,000 as is the depreciation provided during the year. Balance the account, students, and the balancing figure that you get will be 1,30,000. What is this 1,30,000? It denotes purchase of plant and machinery during the year, again which is treated as an investing activity. So this amount of 1,30,000 should be written within bracket. Now coming to provision for taxation, as I've already discussed about the adjustment, so the tax paid during the year was 35,000. If I've already discussed, I think you remember that adjustment which I've already discussed. So balance the account, students, and the balancing figure that you get will be transferred to profit and loss account, which is nothing but the dividend taxation provision made during the current year to be paid in the next year, 45,000. This tax paid during the year 35,000 should be shown under the head operating expenses, and whereas tax provision should be deducted under operating expenses after showing all the items, and the tax provision made during the year should be shown under the head operating expenses, or it can be added to the net profit. Now let us move on to proposed dividend account. There was no adjustments provided for this proposed dividend. So what is the assumption that we are going to make? The dividend proposed during the previous year of rupees 42,000 has been paid during the current year. So to bank account 42,000. So balance the account, and the balancing figure will be transferred to profit and loss account, 50,000. Now we are going to post all the transactions that are recorded in ledger accounts to cash flow statement. So land and building, we have depreciation of rupees 20,000, and similarly if you come to plant and machinery, we have depreciation of rupees 10,000. So both this 20,000 and 10,000 should be shown under the head operating activities. So depreciation on plant and depreciation on building. So if you just come to credit side of land and building, we have bank by bank, that is sale of land and building rupees 10,000. This will appear under the head investing activity as sale of building. The amount should be written without brackets as cash is coming in. So now we will move on to plant and machinery account. We have depreciation of rupees 10,000 as I've already explained, and to the debit side you have purchase of plant, that is 1,30,000, which is shown under the head investing activity, purchase of plant. This amount should be written within brackets as cash is going out. Now let us move on to provision for taxation account. So debit side you have tax paid of rupees 35,000. This tax paid amount will be shown under the head operating activities in the end less tax paid 35,000. And to the credit side, we have provision for taxation made during the year to be paid in the next year, that is rupees 45,000. This amount of provision for tax will be shown under the head operating activities. Now proposed dividend account. So to debit side, you have dividend paid of rupees 42,000. So dividend paid should be shown under the head financing activity 42,000. This amount should be written within bracket. The next item will be towards the credit side. You have the dividend proposed during the year 50,000. This amount should be shown under the head operating activities dividend proposed, that is proposed dividend 50,000. Now we'll come to asset side of balance sheet. So goodwill, opening balance is 1,15,000 and closing balance is 90,000. The goodwill amount balance has been reduced. So this reduced balance amount should be written under the head operating activities. So you have goodwill written off 25,000. So land and building, we have already prepared ledger account. Plant also, it's over. Now debtors, previous year is 1,60,000 and current year it is 2 lakh. You all know that debtors, stock, bills receivable and cash in hand and cash at bank are current assets. So debtors, there has been increase in current asset. So increase in current assets should be deducted. So like for example, here debtors also have been increased. Stock has also been increased and bills receivable has also been increased. So all these three items should be added here. So 40,000, 32,000 and 10,000. So 86,000. So cash in hand and cash at bank, it should be shown in the end. To liability side of balance sheet, equity share capital previous year 3 lakh, current year 4 lakh. So there is increase in share capital, so which will be shown under the head financing activity. So look here for issue of share capital rupees 1 lakh. Now the next item is redeemable preference share capital. So previous year 1,50,000 and current year 1 lakh. The balance has reduced, so which means that there is redemption of preference share capital again, which is shown under the head financing activity. So look here for redemption of preference shares of rupees 50,000. So general reserve, previous year was 40,000, current year it is 70,000, which means that there is transfer to reserve by rupees 30,000, which will appear under the head operating activities, transfer to reserve 30,000. Then profit and loss account, this is nothing but the net profit which we are supposed to show under the head cash flow from operating activities. Look here students, so profit 48 minus 30, which is 18,000. Proposed dividend, we have already prepared a ledger account and transferred all the balances to cash flow statement. The next item is creditors. As you all know, it is a current liability. So 55,000 was the previous year balance and current year 83,000, which means that there is increase in current liability. So increase in current liability should be added. So creditors, so 83,000 minus 55,000, 28,000, it has been added here. Now bills payable, so if you look into the bills payable account, the previous year is 20,000, current year 16,000. There has been decrease in current liability. So students, decrease in current liability should be deducted. So it is 4,000, 20,000 minus 16,000. So provision for taxation, there we have already prepared the ledger account for this. We'll come to the adjustments. So first adjustment is already over. And second adjustment is not over. So interim dividend paid is rupees 20,000. So this will appear both in operating activities, under that operating activities, interim dividend of rupees 20,000, and also it appears under financing activity. So interim dividend paid, which should be written in brackets. And the third adjustment, income tax paid during the year. We have already prepared ledger account, and we are not supposed to again post it any item in any other ledger accounts. So now we will finalize the cash flow statement. So when we finalize the cash flow statement, we have cash inflow from operating activity 1,25,000, and we get cash outflow from investing activity 1,20,000, and cash outflow from financing activity 12,000. So we have to find out the net increase or decrease in cash, that is plus 1,25,000 minus 1,20,000 and minus 12,000. We'll get 7,000, minus 7,000. To this we have to add opening balance of cash, which is given in the balance sheet. So cash in hand, they have given you opening and closing balance 15,000 plus 10,000. So it is 25,000. So opening balance of cash 25,000 I have added here. So the balancing figure that you get is 18,000. What is this 18,000? Closing balance of cash. That is, if you just look into the balance sheet, cash at bank closing balance, it is 10,000 plus 8,000. So total 18,000. So with this, we'll complete the solution of 11th problem.